Well, for more on finance, we're joined in Sydney by Tony Boyadjian, Senior Vice President for Foreign Exchange at Compass Markets. Thanks for your time this morning, Tony. We saw
Good morning, Rachel.
Tony, we saw the Dow take a dive during its trading session overnight. The market there obviously has a lot to be cautious about.
Yeah, they are concerned. This talk of trade war is not going to go away. We've seen the US imposed tariffs on imported steel and aluminium. Now there's talk that it could be further measures against Chinese exported goods to the US. It's not great policy when you start imposing tariffs on your trading partners. The market doesn't like the look of it. The market is now looking at a bit of risk aversion. We've seen the US dollar come off as a response to that, Rachel, and it looks like the market is going to be very cautious now. Regardless of that, the market is still anticipating 3 interest rate rises in the US from the central bank there starting next Wednesday. But of course, the real risk is if we see this tit-for-tat retaliation with further tariffs and trade sanctions, it could harm the US economy going forward. So that's something certainly to watch out for.
Also, Tony, China's recorded strong activity for the start of the year. Will we see any flow-on effect here in Australia?
Well, we've already seen the benefits of the better-than-expected Chinese activity data yesterday. We've seen really strong Chinese investment and industrial production numbers, and the Australian dollar has benefited from that. Australian dollar is trading just shy of 79 US cents as we speak. But the real question, Rachel, is it sustainable? You know, 10 years ago, China was growing at 15% per annum. Last year, it grew at 6.9%. This year, the forecast is for it to be around 6.3 to 6.5%. Now, that deceleration of economic growth in China could see a lesser demand for commodities, especially the commodities that Australia exports, like iron ore, and that could have a profound influence and impact on the Australian economy, because every $1 rise or move in the price of iron ore is something like $400 million revenue for the government. So it's quite significant.
Certainly is. Now, you mentioned the US Fed meeting next week. We will expect a rate rise from them. The RBA, though, here in Australia, not looking to make any moves anytime soon. How does this week's business and consumer confidence weigh into the RBA's decisions?
Yeah, great question, Rachel. I think business optimism in Australia has been quite strong, but consumer sentiment remains quite weak and has been now for some time. You know, the household sector or household consumption accounts for 60% of economic growth in Australia, and Australia's GDP remains weak. It remains lacklustre, and the reason for that is because we have benign inflation, we have weak wages growth, and we have a situation where we have a high debt position in Australia. So the Reserve Bank is concerned, based on all those activities and the softening housing market we've seen in particular. We believe the Reserve Bank won't raise interest rates in Australia until May 2019, and that's probably one reason why we'll see the Australian dollar remain in a tight range over the course of the year.
A long holding pattern ahead. Tony Boyadjian from Compass Markets. Thanks so much.
Pleasure. Thanks, Rachel.